Hi everyone, it's Evan here from the Trade Risk on Friday, January 6th with a weekend market recap video. We're going to be covering all of the major markets, the current market environment, sector analysis, and then finishing off the video with some individual names. I also want to remind everyone that I'm hosting a webinar next Tuesday. It's completely free, January 10th at 1 p.m. Eastern Time during market hours. High probability swing trading, that's the topic we're going to be discussing. If you head to thetraderisk.com on the homepage, scroll down just a bit, and you can see the link to sign up. Just drop your email there, or you can click the link that should be appearing on the top right of the video right now. It's again entitled High Probability Swing Trading. We're going to be spending a lot of time looking at current market environment, how to analyze that, how to use market internals to stack the odds in your favor in some of your trades, and a handful of other topics that is kind of listed out here. So love to have you there next week on the 10th. And with that, let's jump into this week's action. So S&P 500 finishing off the week at new all-time highs. We got the breakout. Take a look here, finished up just about 0.5%. We're looking at the cash market here, and you can see we're closing at these highs. Very clean breakout, very clean move this year, this year, and things look good to start off 2017. So remember, we had our midweek video, but just remember we started the week off down here at the lower end of this range, and it is a relatively tight range, but we started the year off at the bottom end of it. We saw some initial strength to kick off the year. We got strong follow through. Yesterday we did note there just wasn't a lot of energy behind the market. It was just a little bit of a rotation, sluggish kind of day, but today that kind of paved the way to take out the past 2 days highs and previous resistance, and to close strongly and pretty affirmatively here in the S&P 500 at those all-time highs. If we go to the weekly chart, you can see 3 weeks of consolidation, back to the races here. Uptrend is intact, momentum is building, everything that you want to see, as far as new highs go in the market. Now, it wasn't all the same. The IWM did lag, and it is notably underperforming here. And again, notably in a relative basis, right? We're talking about a market here that is still just 1% away from all-time highs. So don't want to blow that out of proportion that we have some drastic, cause of concern here. But just to point out, IWM over the past 2 days is lagging here. It's at the more closer to the bottom end of this range now, and again, it's a tight range, so just want to keep an eye on it. Perfectly healthy to have some rotation, to have a little bit of weakness here, and then to see this pick up the strength perhaps later in the week, heading into next week. That would also be that would be an encouraging point. And really, you have the slack getting picked up by the Nasdaq 100. If we look at the composite, might show a better picture here, pushing to all-time highs. This has really been leading, so there's been a pretty good divergence here just in the past couple of days between the small caps and what the Nasdaq is doing. You got one lagging to the downside, you got one leading, and then you got the S&P 500 that's kind of in the mix of both, but still kind of pushing to the upside. Overall, I think we're in a healthy environment. Market internal supportive, there's a lot of participation, breadth is strong, so I'm still encouraged as far as the way we've been playing it. Continued to have long exposure, did some buying like right out of the gate come the new year, some more buying the next day, and we continue to just stick with these long positions because right now the path of least resistance is higher. You got trend, momentum, and breadth all kind of pointing to that upside. Doesn't mean it can't change. You always got to have your stop losses in place, but for now things look pretty good. So with that, let's jump into some of the other major markets. TLT taking a bit of a break here, finishing lower by about 1% here on Friday, but it still finished up nicely on the week, finished up 1.5% to start the year, and this is a nice relief rally after getting hammered basically since the election. The last 5-6 weeks of the year, TLT really saw that acceleration lower, so a little bit of a relief rally. MACD is starting to move positive now as you get the 8 and 20 cross. My MACD is not standard settings, just FYI when you're looking at these videos. Things look like they're trying to stabilize here. Again, a little bit of weakness here on Friday. Let's see if that spills into next week. To me, just still not actionable enough. If you were kind of buying, last couple of weeks down here at the lows, trying to play for some snapback, I think you could probably be unloading some at these levels. If you're waiting for more, you certainly may get them. But, for now, it's just cleaner setups out there for me. But it's doing its initial work to get that bounce back. We'll see how high that retracement can go and kind of measure it going forward. Gold kind of similar here, falling off a little bit on Friday, filling this this gap here, at least in the ETF, from Thursday's move higher. Finished the week up by almost 2%. So again, getting that nice snapback after getting crushed the past 5 or 6 weeks in 2016. Same comments as TLT. If you were buying down here, you can start peeling some off. It's again not the cleanest chart in the world, but it's doing its first steps of trying to stabilize, putting in that relief rally, and repairing some technical damage. And the silver, very similar, although we could say that the slope of sort of the the sell-off is a little less here. The trend is still clearly lower, but we haven't been sort of in a complete waterfall like we saw in TLT and GLD. Silver was a little bit more resilient. You can see just more sideways in nature. Again, giving some back here on Friday, but it still had an up week by 3.5%. So that's the metals. If we go to the oil, had a pretty ugly start to the year. This was Tuesday, where we had this big, wide-ranging, bearish engulfing day. Put out a little note on that day, just pointing that out, saying, hey, this could be a day that we take notice, perhaps a trend change. Not convinced of it yet, but it's a day to take notice. And so far, we got no follow through off that move. We've actually now retraced almost 50-60% of that sell-off from Tuesday. That's encouraging that the bears, the sellers, didn't have enough energy to really take us lower and start to really have a change of character start to a new year. So I think you can still kind of hang in here. It's mostly wait and see. You have a nice range. You get the highs up here around $11.90 or so, $12. You got the lows, basically the pivot low from Tuesday. If you start to break down below $11.30, $11.40 in the ETF here, then you probably want to tighten up your risk. Be cautious, short if that's your thing, but that's sort of the range that I'd be looking at right now in USO. And UNG is still kind of struggling to find its foot. It had, of course, this brutal sell-off to start the year. Trying to stabilize at $8 here in the ETF. So far, again, closed the week off a little bit weak, but again on the week down 12.5%. So pretty dramatic 1 week move. A lot of technical damage, a lot of momentum to the downside right now. Wouldn't want to be trying to step in just yet. Need to wait for this dust to settle, at least as I look at this, and maybe pick a better spot down the road. So that is a wrap up on some of the commodities. Let's talk about some of the sector analysis. XLK, this has really started to emerge here, particularly Friday, as it broke out to new highs here from this range. We had this shakeout last week, which really kind of set up the move for this ultimate move to all-time highs here. So XLK really stepping up, leading us higher. XLV, we've talked about this one, right? This has been a nice leader, biotech specifically, but the healthcare sector in general has been acting very well to start off the year. This has been powering us higher. As far as IYT, which was our prior kind of big leadership group here, this is the transportation average. It's still consolidating, and I actually look at this. I still kind of look at this as a very constructive behavior right now in the market. We have a lot of these prior leading sectors that are still consolidating. Meanwhile, we're already at all-time highs. So what that tells me is if these sectors start to get rotation back into them and we start to see continuation patterns emerge in something like the IYT and something like perhaps the semis, banks, which are still kind of moving sideways here, energy also in a bit of a holding pattern. So you got a lot of sideways holding patterns, potentially continuation patterns here, and if they can start to ignite to the upside, I think you got a lot more strength to kind of fuel this market higher throughout the rest of this month. XLU also hanging really tight at this resistance level. XLP also getting pretty tight here, bumping up just over $52. So there's a lot of interesting sort of sectors that you want to pay attention to that could see some rotation. Start building that watch list. Take a look at what's moving underneath the hood in those sectors. Now, with that, let's jump into some of those individual names. Apple saw a nice move higher here on Friday, back to now challenging the October 2016 highs. I think those were the highs for the year, I believe. No, not quite. Yeah, I think they were the highs of 2016. So, we're back up here. Another higher low potentially in place here after support was confirmed right around 115.75. Looks good. check the date on earnings because we are coming into earnings season, so you're going to want to double check all of that. But looks good there on Apple, Google. We talked about this one for a while. Unfortunately, I missed it. Hopefully someone caught it, but we were talking about the bullish sort of development and consolidation pattern in this flag here. Today was really sort of the breakout of it. It tried Wednesday, kind of gave you that indecisive day. Thursday, I guess you could argue that was sort of the breakout from this channel. It couldn't actually clear through Wednesday's highs, though, so that really is what had me hesitant, was to potentially take waiting to see if this could start to really clear 815 or so. And then today, as soon as it got above that level, just really ignited to the upside, tacked on another 10 points. So all the way up to 825. Again, this has earnings in a couple of weeks. Keep that in mind. But looks very well in motion to perhaps tag those all-time highs in the coming days, weeks. Netflix, this one had a breakout earlier. It was a little bit of a laggard here on Friday, but it already did get its breakout a little bit earlier than some of these other high beta names. It did make new all-time highs and then pulled off of them, so might need a little bit of a pause in Netflix, but still trend is higher there. Twitter, also starting to move higher, did get a bit of a fade off the highs today, but it is holding, at that very last desperation line of around 16 and a quarter. You got a 3-day bounce into some of these moving averages, so it'll be interesting to see. This will be the real test now. Can Twitter actually sustain these levels? Can it hold up above, really, $17, $16.75? Can it hang in there and then potentially work itself higher, or is it going to get slammed back down, come back down to these lows and put it back in sort of trouble's way? So we'll have to see how that all shakes out with Twitter. Alibaba, this is one that also looking good. Had a nice follow-through day here on Thursday, up 4.25%, back above $90. That looks good on multiple time frames. So a lot to like in this sector, and Tesla keeps continuing to just run away with it. Ever since breaking this downtrend line, getting back above $200, this has been off to the races. It's a longer-term potential, pattern here. So it's working its way back up towards the midpoint and upper range. So it could be interesting as well. No matter what they throw at it, it continues to sort of work itself higher. So Tesla also been impressive this year. So with that, let's end it there. And want to remind everybody again to check out the webinar I'm hosting next week. Just head to thetraderisk.com or traders.com/webinar. Thank you for watching, and I will talk to you soon.